So let's dive deep into what's really happening here, because this situation in India is absolutely fascinating, and it has implications that reach far beyond just one country's precious metals market. When we talk about an $8 premium over COMEX prices, we're talking about a premium that's roughly 7 to 8% over the international benchmark price for silver. Now, to put this in perspective, normal premiums in India typically hover around $2 to $3 per ounce. So when you see premiums jump to $8, that's not just a little blip on the radar. That's a massive, screaming signal that something fundamental has shifted in the supply and demand equation. Let me explain why India matters so much in the global silver story. India is traditionally the world's largest consumer of silver after industrial uses, and the country has a deep cultural connection to precious metals that goes back thousands of years. Silver isn't just an investment in India, it's woven into the fabric of society. It's used in jewelry, it's given as gifts during weddings and festivals, it's considered auspicious, and it's a traditional store of wealth for millions of families across the subcontinent. During wedding season alone, which typically runs from October through March, Indian families purchase absolutely staggering amounts of gold and silver for dowries, gifts, and jewelry. We're talking about a cultural phenomenon that involves millions of weddings every single year, and each wedding can involve significant precious metals purchases. But here's where it gets really interesting. India doesn't produce nearly enough silver to meet its own domestic demand. The country has to import the vast majority of its silver. And that's where global supply chains come into play. When you start seeing these elevated premiums, it means that the usual flow of silver into India is being disrupted, or that demand has surged so dramatically that importers and dealers simply cannot source enough metal to satisfy buyers. Both of these factors appear to be at work right now, creating this perfect storm that's driving premiums to levels we haven't seen in quite some time. Think about the mechanics of how this works. Silver traders and importers in India watch the COMEX prices, which is the benchmark futures exchange in New York where silver is traded. They calculate their costs, the international price, plus shipping, plus insurance, plus import duties, plus their markup, and that determines the local price. Under normal circumstances, this premium stays relatively stable because the flow of silver is predictable and steady. But when demand spikes or supply tightens, those premiums start to climb because buyers are competing for a limited amount of available metal. At $8 over COMEX, you're seeing real scarcity premium being baked into the price. And that tells you that physical silver is actually hard to come by in the Indian market right now. Now, let's connect this to the broader global picture, because what happens in India doesn't stay in India. The precious metals market is highly interconnected, and when one major market starts showing signs of stress, it can ripple through the entire global system. Right now, we're seeing similar tightness in other markets as well. Refineries are reporting longer wait times for delivery, mints are struggling to keep up with demand for coins and bars, and even in Western markets, premiums on physical silver products have been elevated compared to historical norms. India's situation is perhaps the most dramatic example, but it's part of a larger pattern that suggests the physical silver market is under real pressure. One of the things that makes this situation particularly interesting is the disconnect we're seeing between paper silver and physical silver. When I say paper silver, I'm talking about the futures contracts, the ETFs, the derivative products that allow people to gain exposure to silver price movements without actually taking delivery of physical metal. The COMEX price is essentially a paper price. It's what people are willing to pay for promises of silver delivery in the future. But when you go to actually buy physical silver, especially in large quantities, you're operating in a different market with different dynamics. And right now, that physical market is telling a very different story than the paper market. The $8 premium in India is essentially the market screaming that paper promises aren't enough. People want the real thing, and they want it now. This is significant because historically, major bull markets in precious metals have been preceded by exactly this kind of divergence between paper and physical prices. When physical premiums start climbing dramatically, it suggests that the paper price may not be accurately reflecting the true supply and demand situation in the physical market. Eventually, these disconnects tend to resolve themselves, and when they do, prices typically move to reflect the tightness in the physical market. Let's talk about what's driving this demand in India specifically, because understanding the drivers helps us predict where this might be heading. First, you have the traditional seasonal demand I mentioned earlier. Wedding season is in full swing, and Indian families are purchasing silver for jewelry, gifts, and traditional ceremonies. But on top of that seasonal demand, you have growing investment demand. Indian investors have watched global economic uncertainty increase. They've seen inflation erode purchasing power, and many of them are turning to precious metals as a hedge and a store of value. The Indian rupee has also faced pressure at various points, making dollar-denominated assets like silver more attractive as a way to preserve wealth. There's also an interesting generational shift happening in India. Younger investors are becoming more sophisticated and more globally aware, and they're looking at precious metals not just as traditional jewelry or cultural items, but as legitimate investment assets. This is expanding the pool of potential silver buyers beyond just the traditional wedding and festival markets. You're seeing more and more Indians buying silver coins, bars, and even participating in digital silver platforms. This structural shift in how Indians view silver is adding a layer of sustained demand on top of the traditional cyclical demand patterns. From a supply perspective, the situation is equally compelling. Global silver mine production has been relatively flat or even declining slightly in recent years. Unlike gold, which is mined primarily for its own sake, about 70% of silver production comes as a byproduct of mining other metals like copper, lead, and zinc. This means that silver supply is somewhat dependent on the economics and production levels of these other mining operations. When base metal production slows down or becomes less profitable, silver supply can be constrained even if silver prices are rising. We've seen some of this dynamic play out over the past few years, contributing to a tighter overall supply situation. Additionally, industrial demand for silver has been growing steadily, particularly in solar panel production, electronics, and various green energy technologies. Silver has unique properties that make it essential in many modern technologies. It's the most conductive metal, it's highly reflective, and it has antibacterial properties. As the world pushes toward renewable energy and advanced electronics, industrial silver consumption continues to climb. This creates competition for available silver between industrial users, investors, and traditional buyers in markets like India. When you have multiple sources of demand all pulling on a relatively inelastic supply, prices and premiums tend to rise. The geopolitical dimension is also worth considering. In an increasingly uncertain world where currency values can fluctuate dramatically, where banking systems face periodic stress, and where international tensions can disrupt trade flows, physical precious metals offer something that paper assets cannot. They're tangible, they have no counterparty risk, and they've maintained value across thousands of years of human history. Indian buyers understand this implicitly. For generations, families have stored wealth in gold and silver precisely because these metals transcend political and economic systems. In times of uncertainty, this wisdom becomes even more relevant, and we're seeing it reflected in the willingness of buyers to pay substantial premiums to secure physical metal. What does all this mean for silver prices going forward? While nobody can predict the future with certainty, these elevated premiums in India are definitely a bullish indicator for the silver market. When physical demand is this strong and premiums are this high, it suggests that the current COMEX price may not be sustainable at these levels for long. Either more supply needs to flow into the market to satisfy demand and bring premiums down, or prices need to rise to ration demand and incentivize more supply. Given the constraints on the supply side and the structural factors driving demand, the path of least resistance may well be higher prices. There's also a feedback loop to consider. As premiums rise in India and other markets, it attracts attention from investors globally who start to recognize that physical silver is in genuine demand. This can trigger additional investment buying, which further tightens the physical market, which drives premiums even higher, which attracts more attention, and so on. We've seen this pattern play out in previous precious metals bull markets, and the current setup has some similar characteristics. The key is watching whether these elevated premiums persist, or whether they're just a temporary spike. The longer they remain elevated, the more significant the signal becomes. For anyone holding silver or considering adding silver to their portfolio, this situation in India provides valuable information. It confirms that physical precious metals are playing their traditional role as stores of value and hedges against uncertainty. It demonstrates that despite whatever the paper price might suggest, there are real buyers around the world willing to pay substantial premiums to acquire actual metal. And it reminds us that precious metals markets are global, interconnected, and subject to powerful cultural and economic forces that transcend any single country or market. The bottom line is this: $8 premiums in India are not normal. They're not sustainable at current price levels. And they're telling us something important about the state of the physical silver market. Whether you're a seasoned precious metals investor or someone just starting to pay attention to these markets, this is exactly the kind of signal you want to be watching. It's real-world evidence of supply and demand dynamics that eventually show up in prices. And it's happening right now in one of the world's most important silver markets.